Welcome back to Business Deals and Real Talk with the Choes. I'm Holly.
And I'm Johnathan. Today, we're diving into one of the most important pieces of the business buying and selling process, financing, specifically SBA lending in 2025.
Yeah, so if you're buying a business, chances are you'll be looking at an SBA loan. And if you're selling, it's very likely your buyer will rely on SBA financing to get the deal across the finish line.
Which makes today's conversation so important to all the would-be sellers and buyers. The banks are often a big part of the process. So we've got an expert. We're joined today by Huy Tran, who is an excellent lender. We've worked with him several times and we recommend him. Huy Tran is Senior Vice President and SBA lending expert at Byline Bank. Huy, welcome to the show.
All right. Well, thank you guys for welcoming me. So like Johnathan mentioned, I'm Huy. I've been in SBA lending for, I think, the last 10 years. Primarily now I've been in the 7(a) lending space. So again, thank you. And I love to be a part of the team. So.
Well, thanks, Huy, for being here. I know you just came fresh from Vietnam on your vacation, which is awesome. I'm glad to hear that. But hey, so let's kick things off. What's new with SBA lending in 2025? I mean, what should business owners need to know?
Well, as a lot of people may know, it was a new SOP that did roll out earlier this year. A lot of changes recently. I think some may say it's negative, some may say it's positive. For me, I believe it's just reverted back to a lot of the older rules that we have, which I think is a little bit more stricter. That we previously had prior to COVID. I think the biggest one, as far as in the acquisition space, is there's no longer 2.5% down or 0% down anymore for new acquisition owners. So the minimum now has to be 5%, which is one of the old rules, and you can make up with the remaining 5% as a seller's note, but it has to be a full standby. So a lot of them, just like I said, is the older rules that we have seen it before. It just a little bit, those are the stricter rules that we had in the past. And also, I think the main thing is I have seen a lot this year is the disqualifying owners that are not U.S. citizens. I think you guys might have seen some buyers, previously before that are not U.S. citizens or permanent resident in the U.S. So now I think those has been kind of. So to me, I think those are some of the bigger changes that we have seen in the acquisition space.
And that did make an impact on some of our deals with these new.
Yeah. Yes, I know we came across on a few, but I think those are some of the big changes. So.
Yeah, dude, thanks for sharing that with us. We often get questions about the interest rates. Could you talk a little bit about how the interest rates are impacting deal approvals and some of the things that might help with the processing speed of doing deals?
Yeah, of course, the interest rate this year, I know that there's been a lot of talks about, the Fed's cutting rate. Hopefully, yes, come towards the year end. The rate is still fairly high at the moment. I think, things has been tapering down somewhat. Definitely putting some business acquisitions, if there's on the line or on the fence as far as the cash flow coverage, some of them then now you cannot be able to cash flow business at a higher interest rate environment. So sellers are now mostly have to carry a seller's financing for it, right? Or buyers gonna have to contribute more down payment towards the project. To me, I think it's definitely shrinking a lot of shrinking the pool of buyers. Maybe weed out some of the weaker ones that they don't have the down payment for buying the business, and then I think it's qualifying for, I have seen it where I've lost some deals as, buyers, they have other options like, taking out a home equity line or even private equity financing is cheaper rate than SBA. So that's why I've seen a little bit slower down on the SBA side. I think we came across one deal last week, right, Holly? And then he went up with using his home equity line, which, I told him it's probably going to be cheaper rates for you at that point if you do have equity in your home. So
Yeah. And that's great too, because I think that's what's so special about you is that you do give them options, and you help them through what makes sense for them.
Correct. And that's why I want to kind of lay it out option on the table for them so at least they understand what are the benefits and what are the advantages that we can bring from the SBA end, and maybe they might have a better option for the different lenders.
Yeah, no, absolutely. So, well, let's talk about the programs. Like, which SBA loan programs are most popular right now, and why are buyers gravitating towards them?
Right now, the most popular is the 7A program, where you can pretty much use it for anything. For business goodwill, if they want to buy a commercial real estate with the business, you can also use that as well. And then we can also finance working capital and inventory. So that's probably the most popular one. Now, if it comes to as far as exceeding the SBA limit, perhaps sometime we also visit, there's a 504 program that can help finance the real estate component as well. So we sometimes see a combo of those, but primarily what I see is the 7A.
And I think it's great that you guys factor in working capital because it does help set up the buyer for success.
Mm-hmm. Yeah. And that's one of the key things now that we really kind of hone in as far as this year, that we want to make sure we set up the buyers, to become successful, right? And we want to make sure that they're going to have enough working capital going into a business.
Yeah, and then talking about the programs, one of the benefits that I see with the SBA 7A lending program is the longer term. If you get conventional lending, the terms are usually half as long. So the SBA 7A, it's for a 10-year term, and that can really make the difference whether the deal is approved or not, and really the cash flow that the new owner that they can have, right?
Correct. You're hitting right in the spot. So we can really max out the amortization for just a straight business acquisition at 10 years. I see most, private lenders or conventional lenders, they can only go up to 5 to 7 years. Now, going back to the 7A program, if the business has commercial real estate, you can combine that with the business goodwill. And if the commercial real estate portion is 51% or more of the total project cost, then you can qualify for a 25-year amortization. So you're able to extend it out longer, lower your monthly payments for projects.
Yeah. So when you say that, it's not 25-year term only for the real estate portion, but on the entire deal. Is that
correct? Yep, that is correct. On the entire deal. Mm-hmm.
Okay. And then I just want the audience to really get this on a combination business sale and real estate purchase, that if it is over, 50%? 51%, the value of the transaction, 51% on the real estate and 49% on the business value, then the whole loan amount is amortized for the 25-year period. So where there are combo options, that could really make a huge difference.
Yes, especially in a higher rate environment, that you're able to lower your monthly payments on that.
Absolutely. I mean, so as a lender, when you're looking at application, what makes for a strong borrower? What gets your attention right away in a positive way?
Yeah, really good question. I like this question a lot. Actually, for me, what I see for a kind of type of client or student would have to have direct industry experience. I think that's really made up a lot as far as, if they have experience in that business that they want to buy already. And then also coupled with a solid personal financial statement at the same time. So, let's say if they have, 10% of the down payment, some banks, they want to see that you have at least another, maybe minimum 10% outside of that for post liquidity. Because, you just want to have at least some room for working capital. Again, going back to the working capital component, that's really critical in the business to make sure that you have that extra. Banks are going to give you working capital as well, but you want to have that extra set aside, in the rainy days. You don't know when those rainy days are going to come. So setting that extra will help. When a buyer comes to me and if they haven't done any due diligence yet, sometimes I ask, well, how do you kind of derive your valuations? Kind of what justifies you for paying that business price. If they have done their research, they know their model, and they know the numbers, giving me a good signs that the buyer does truly know the financials of the business. Those are the questions that I usually ask on a good, strong kind of borrower application. So.
And then, Huy, I'm just curious, do they need to own like real estate or property to qualify for an SBA loan?
They do not. That's not a requirement for SBA. Now, but it does help, of course, when the lenders look at it, that they have extra collateral pledge. That does help the application. Okay. But it does not technically disqualify them to apply for this.
Great information. On the other hand, when you look at a package, Huy, what are some of the red flags that makes you pause or get concerned about the deal?
As far as on the buyers or on the seller side?
How about answering both? That's buyers on here, yeah.
Yeah. Well, I think seller side, if they're not working with a good reputable brokers, of course, like you guys, and having a team behind it to really do the analysis and the recast, if there is any seller discretion expense, I believe you guys already know that the bank is going to ask to get proof of those, right? It's not just random, I've seen some brokers that put distribution on there as an add back. Well, that doesn't really count as an add back. So those I typically see when there's a red flags, as far as on the seller side, when they don't understand what the true numbers and how they arrive at their valuation. As far as the buyer side, of course, again, understanding the financial, if they don't have a clue when, I'm asking all these questions about the business, have you visited the business? And they say they haven't seen it or they don't know how it operates, kind of giving me a little bit setback. It's like, okay, well, are you ready and prepared to really, going down this path of buying a business? And of course, all the red flag is just more, if they have any prior bankruptcies or what the personal credit score will look like. That's also giving me a hint to the lenders as well on how they previously, what their financial position would be.
Huy, I'm glad that you talked about the buyer's background and their ability to operate the business. Could you talk about how you look at the SBA requirements of experience, how their resume and their past work experience impacts your ability to lend to them?
Yes. So I would always recommend buyers to really prepare a detailed professional resume, just like you go in and applying for a job. When you go and applying for a business acquisition loan, you want to really set yourself, best foot forward and make sure that you have detail out all your experience that you have done in the past, how you manage, if you're in managerial roles, that helps a lot with, management experience. A lot of the business, you're really going to have that management experience skill sets. If you're working in a sales role, I think a lot of that helps. If you go into a business or a retail business, that translate into those businesses that you want to buy as well. So, I think it does not have to be direct industry experience in some cases, but if you have relatable experience and if you build solid personal financial statement, it speaks a lot about how you've done in the past to kind of build up your personal financial data and ready to maybe step out of that corporate world.
With your bank, do you guys, coupled with the resume, do you also have them do like a business plan or anything like that?
Yeah, in some cases I do. I like it when the buyers come prepared for a business plan and they know, kind of the next step after they sign in the LOI, of course, they want to, put together, sit down with the sellers, prepare, kind of walk through the next, 12 to 24 months revenue expenses, kind of look at, okay, you have to get an understanding of cash flow each month. And then also on the business plan side, you got to know how what are your competition, who are your vendors, your customers, how you gonna able to grow that once you take it over. For banks, a lot of banks, they look at historical, right, cash flow basis, year-to-date numbers, but I think it's more important for buyers to look at the future as well, what they can do to improve or grow the business. I think that's, if they're giving me hints that, okay, they're going to do A, B, C, D to grow the customer base, that makes me feel a little more comfortable as well. That, they know they're ready to prepare and take over the business. They have plans.
Yeah. And that makes sense because, when we sit down with a buyer and seller, we often have the sellers share what the growth potential are. If you do X, Y, and Z, this is what the projection looks like. And together they discuss that. So I'm glad to hear that you guys do take that into consideration.
One of the other things that I think is super important that I'd like us to spend a little bit more time on are the seller ad backs. The business owners, when, oftentimes they do have expenses that are not absolutely necessary to operate the business. It can be things like meals and entertainment and those type of things. And to the audience, what Huy said was we have to be able to demonstrate that those were real expenses. So having good books and records, being able to validate that, it is a common thing that most business owners and banks, when looking at financing a deal, is a reality of the business. So, for example, the easy one, maybe we could talk about what you do and you don't accept. So sometimes there's cash in the business. I've never worked with a lender that accepted, other income as cash. Hard to prove, right? And one of the things that you said was we have to be able to prove that those ad backs exist. So cash is definitely not something that is included into the cash flow analysis. How do you look at some of the other ad backs?
Yeah, you mentioned about meals and entertainment or travel, right? I have seen a lot of business owners that they take trips with their family, go to nice vacations that they, write off on the book. Most of the time, if they're able to provide us an income statement or bank statement, highlighting those expenses that is out of the ordinary, that is not required for a business to have those travel expenses. Those are the reason that we can present it to our credit teams and able to add those back. So I would say there's not categories that are not allowed for add back. That's a wide variety range, but having that proof and showing to us where that flow on the tax returns or which category it flows with the tax return, that's where we can utilize that as an add back and have that explanation.
Excellent. But I guess a key takeaway for the ad backs, and we're talking about ad back, we come up with the seller discretionary earnings to come up with the true profitability of the business. So it adds to the profitability, and the higher the profitability, the more that you can lend. So, but the most important thing is we have to be able to demonstrate to the bank that they actually existed and that we could trace it back to the general ledger and that they were not necessary to operate the business.
Yeah, that's helpful. So I guess, now in 2025, with the new SOP and everything's different, do you find that how long is the timeline from the application to funding?
Yeah, as far as the new SOP and all the changes, it doesn't have our timing for my bank side. So our typical time frame, start to finish on an application, I would say is between 30 to 60 days. Just really depends on, I think of a business acquisition, it's like a three-legged stool, right? We need the lender to participate, we need the buyer to participate, and we need the seller to participate. Getting us all the information that the banks kind of need to go through the underwriting process and go through the closing process. So as long as all those three parties are actively, participating, involved in moving the process through, I can get the deal across the finish line sooner. So, 30 to 60 days, I would say, is an average time frame.
Okay, that's good to hear. Just because, people out there's a lot of myths and misconception. They're saying it's taking so much longer. And I was like, I don't remember it being like, but thanks for clearing that up.
One of the things that is super important is if you have to have the information. Sometimes the buyers and sellers delay the process by not giving the lenders the information that's needed in a timely manner. And that could really slow down the process and increase the time it takes to get to closing. Are there industries that you like more than others, that are easier for financing than others? And if you could share some highlights as to why?
Yeah, I mean, as far as each bank is going to have their own appetite and how what industry they go after or which portfolio that they want to build. For me personally, at Byline, I think I've seen it a lot across all the SBA lenders too. That kind of after the COVID era, eatery and restaurant or independent restaurant is a little bit harder, I would say, because SBA has a tracking where they track each industry, and with the default rate, I think they've seen a little bit higher on the restaurant or independent. We still finance, acquisition in the restaurants, don't get me wrong, but of course, gonna have to come with a little bit more qualification on the buyers. Does the buyer have some eatery or some restaurant industry experience? Do they have enough liquidity to go into and buy a restaurant? So I think that was a little bit harder now, but I think outside of that, we're still pretty much open to all industry. With my bank, we're stepping away from trampoline park or or FedEx or contractor routes. We haven't seen those requests or desk. So I would say that's pretty much it as far as on our end on my end.
So basically, the basic, less risky the industry is, it's easier to lend to. And like you said, there are statistics out there. Restaurants have higher default rates. In those cases, you can still lend, but can be scrutinized more, and the buyers and sellers are going to have to be more flexible or bring more to the table, but those deals can still be done.
That is correct. Yep.
So for buyers, what's your top piece of advice for them and how they can improve their chances of the SBA approval?
Yeah, I would really come prepared. Of course, build a good resume. You mentioned going back, you are going to apply for a business loan, so think of it as you're applying for a job. So become prepared for a good professional resume. Want to build up your personal assets. First, try to reduce any personal obligation or debt that you have out there, and include credit scores, putting your best foot forward. And once you narrow down a couple of industries that you want, just do some studies on it and be prepared to do your due diligence once you come across a business that you're interested in. So that's my only piece of advice I'm looking at in that course.
Do you recommend them get pre-qualified before they choose a business to buy?
Yes, yeah, they can come to a lender and asking to kind of look at personal financial statement, and then we kind of give them a feedback. Okay, this is probably the range of business that you want to kind of go after as part of the business, based on your liquidity position.
Same questions for sellers. What can sellers do to make their businesses more attractive and bankable for buyers who are relying on SBA financing for the deal?
Yeah, I mean, I've seen independent sellers before. I've worked with a lot of the business owners that going through business brokers like you guys sell. I've seen it more successful going through a reputable business broker, so at least you guys can help them prepare for the book, have a cleaner tax returns, right? I think the more clean tax return that we're able to prepare or have, it's going to work better for the buyers and for the bank. And it's going to able to maximize out your value when you have this clean financial. So I think that's going to be the number one suggestion that I would have for sellers.
Okay, so last one, Huy, thanks so much for being so thorough and clarifying all of this for us. So what's the most common mistake you're seeing borrowers make this year, and how can they avoid them?
I would say across all my portfolio, I think the biggest mistake probably is the working capital component. They have to think through, it's not always going to be sunny weather, right? This is always always going to face some rain days as well. So having that setting aside a working capital component, having that discussion with the sellers, going through the books, understanding the cash flow cycle for each month and how much working capital that you need to reserve before stepping into a business. I think that's the key thing. So, and that, common mistake to owners that have enough working capital in the business that could really jeopardize their ability to operate the business. And I have seen it some owners, they go out and take some merchant cash advance debt. I think those are, I would say, probably the biggest killers to any type of business if they can not have the ability to repay those debts.
That's huge, Huey. And, we see that, unfortunately, from time to time. But, having those reserves and thinking through the business cycles, the sales cycles, the economic cycles, and being able to weather the storm is really important. And I think I read a statistic that's the mismanagement of the cash cycle is the number one reason why businesses fail. Not that they don't have a good business or good products or those things, but it's really the cash management and understanding how to address those.
Address those issues. Yes, I definitely agree with you.
Yeah, and that's so important, those rainy day funds, right? Well, Huy, thank you so much for joining us today. I mean, your perspective at the lender side is incredibly valuable. I think this is a lot of great information for our sellers and our buyers out there, the ones who are preparing to sell and buyers who are out there ready to, buy their next acquisition.
Yes, definitely. Well, thank you for having me, guys, and feel free to, of course, you have my number, so reach out to me if you guys do have any questions. Okay.
Absolutely, Huey. Thank you so much. How do people get a hold of you if they are interested in getting pre-qualified or financing a deal, or even just if they're business owners and they need some capital, they need some financing? How do they get a hold of you?
Yeah, so they can definitely reach me on my cell phone at 930-475-1152. Feel free to put my email address in your video, and they can definitely reach out to me via those methods.
Yes, we'll definitely do that, Huy. Thanks so much. And that's it for this episode of Business Deals and Real Talk with the Choes. Be sure to subscribe, share this episode with another business owner, and join us next time for more behind the scenes conversation about buying and selling businesses.